How's it going, guys? Welcome to the video. It's Tim Aslan here, CMO of TradingLink. Today we've got a special episode. We are interviewing Marbob6, who is an exceptional professional trader. I've known him for a few years now. He's a great guy and an even better trader. So without further ado, let's get right into it. So Marbob, good to have you on here. How are you doing?
Hello, Tim. Thank you for having me here on your podcast. Great to be here.
Yeah, so I'm excited to talk to you about what you trade and how you trade. But before we get into that, I was wondering, how did you even get into trading and how long have you been in trading? So just take us from the beginning.
Yeah, I wouldn't say like many of us, but some of us also, of course, were interested into money, how money works. And it was sometime in 2015 where I read the book. Actually, that got me into trading. The creator from Jekyll Island, about the Federal Reserve, how it was created back in the beginning of the Fed. And that led me to Bitcoin, learning more about money. That led me to Bitcoin back in 2015. Of course, like any of us who first started trading, I did not know any of the technicals, nothing about trading other than searching, digging, how to buy. Back then, I used to buy Bitcoins or trading them through a platform called Paxful, where you used to buy from gift cards, exchanging some of the some coins, right? Some portion of the Bitcoin, not even a full Bitcoin. Until, of course, I started to dig more, trade more, and then the journey started back in 2015, March or so. Of course, my first journey was through technical analysis, trying to understand how the technicalities work within the framework. And of course, the more I learned, that led me to the psychological aspect to the book of Mark Douglas. And from there on, everything started to make sense. And of course, that book led me to Japanese candlestick in order to identify how to read the chart, what we see in the screen, right? The candlestick, the waves that represent the behavior of buyers and sellers, the forces, I normally say, trying to argue who's right, who's wrong. And that's basically how I started. 2015, the creator from Jekyll Island led me to Bitcoin. And then the book from Andreas Antonopoulos also led me to the fundamentals of Bitcoin, the network. But then, of course, the more I understood that trading itself is only about to make money consistently, and anything else is noise, right? Because sometimes we try to portray ourselves as winners mainly. But there is a hard work behind trading itself. Like any professional trader knows, it's not as easy as many professional traders know, at least. There is a hard work before the process, identifying patterns, executing, and then, of course, the management.
Yeah, wow. So you started with Bitcoin, and then you mentioned you read a lot, like you read Mark Douglas's book, you read about the Japanese candlesticks. Was most of your learning to trade from reading, or did you also watch, like YouTube videos where people had education, or was it pretty much mostly reading?
Yeah, no, actually that's right. I started digging, of course, videos, and the more I watched those videos, the more I noticed people were, I wouldn't say this improper word, BSing, or using the BS for big stories, okay? Let's put it that way. I used to watch some videos, and then everything led me to believe or to understand that everybody was presenting their interpretation of what their perception of the technicals was. And then after reading Mark Douglas, everything started to make more sense, right? That the trading himself or the trading itself is more about the psychological aspect rather than what anybody else says out there.
Right. And is that Trading in the Zone? Was that?
Yeah, Trading in the Zone and The Disciplined Trader, both of them.
Awesome.
Yeah.
Yeah, guys, if you haven't read those two, definitely read them. Awesome. And I know, you started with Bitcoin trading. Do you trade only crypto now, or have you moved on to other asset classes? And if so, Do you see a lot of differences, or are they similar?
Yeah, I started with crypto, as I said before, 2015, and then around 2019, just before the COVID crash, that's where I started to get more interested into the futures market and trade the U.S. indices mainly, the S&P, the Nasdaq, and the Dow Jones. And of course, I trade some agricultural commodities, metals too. And yeah, there is some differences, not as volatile as crypto. So you have some sort of cushion of protection, I would say, because with crypto, at least altcoins, you never know if the framework, the structural formation will play out or not. I believe the U.S. market is not as manipulated in a sense.
Yeah, a lot more volume too.
Yeah, definitely where the big money is on the U.S. market. So that's mainly the reason I'm interested more into the futures market.
Right. And so do you trade like essentially the contracts, they have the minis and then they have the full contracts. Is that how you trade it, or do you go through CFDs, or what do you use primarily?
Yeah, I first started with CFDs, and then the spread scared me because every pattern I needed to trade on a certain exchange did not match the number on the other one. Mm-hmm. And then, of course, I decided to trade the main contract from the ES minis, and at times some micros too for risk mitigation. Except the gains are not as big as the e-minis, but I believe it is also part of risk mitigation.
And so do you do day trading? Are you scalping, swinging? How do you normally trade? Take us through a normal day.
Yeah, I used to start day trading, and then the more I learned through the journey, I noticed that I wasn't very, I wouldn't say successful, but that wasn't for me for some reason. I used to lose patience, didn't have enough time to be on the chart 24/7. So then that led me to swing trading because the larger structure on the 4 hour or the daily time frame, I believe the data is more reliable than the minor time frames. But again, that's only my interpretation. I believe that the same conditions can be applied on minor time frames, but to me, based on at least in my experience, the 4 hour and the daily time frames are the one that I personally feel more comfortable trading on, based on the reliability of those parameters.
So you'll hold a trade for a few days normally?
Weeks even.
Weeks
Yeah.
even, okay, nice.
Yes.
Nice. Do you ever trade Forex, or is it mostly U.S. markets?
No, not really. I don't think I ever trade. Maybe I tried before on a different platform, on a CFD platform, but I never really paid much attention to Forex.
Okay, cool. Yeah, a lot of our viewers do Forex and then stocks and also CFD. I'd be really curious to see and show the viewers, what kind of entries you're taking. If you wouldn't mind sharing your screen. I think you do mostly harmonics, so I think the viewers would like to see that. I think most viewers, especially nowadays, ICT and SMC concepts are very popular. So to see someone do something different, it gives them a new perspective. So if you wouldn't mind sharing your screen, and maybe just going through a few charts you like, a few examples, just a few.
Yeah, mainly as a swing trader, I need to look at the main chart, the primary trend, right? Going from the basics or the basis of the Charles Dow theory or the tenets of the theory. Primary trend, secondary trend, and of course, if we have another continuation of that primary trend, right? Whether a bull market or a bear market. On an example here, this is a weekly chart on the S&P 500. How do I know if this is a primary trend or not? Again, within the theory of Charles Dow, either after the prevailing trend has been established, right, a very significant upward momentum here, started to correct. How do we know if this is only, or if this correction will be a turning point, a shift in trend, or a continuation of the prevailing trend? And this is where I, of course, as a harmonic pattern trader, I also apply Fibonacci retracement levels, where I, of course, as many harmonic patterns or trader knows, the tools, the harmonic pattern tools, or the harmonic retracement tool, I'm sorry, is pretty much a core before starting to stepping into harmonics, right? Because those parameters correspond to each data point within these tools. So again, at first, we identify the first primary trend within the weekly, even the monthly too. And the corrections I'm looking here, if this is indeed a continuation structure, meaning a continuation of this prevailing trend that has been upwards, I normally look for the common areas of retracement that are ideally within bullish conditions or bearish conditions also, depending on the trend, the 0.382, the 0.50, and the 0.618. Normally, the 0.382 is the only retracement that comes from an upward move before another continuation within bullish conditions, okay? And of course, this is also within the framework of the Charles Dow theory, that a trend that has been established will either correct 33% of the prevailing trend or 50% or even 66% that lead us to the 0.618 before the momentum resumption, okay? So after identifying this primary trend, I then start to zoom into the daily time frame after, of course, establishing the support here. So then I move into the daily time frame and I start look for other variables within the same levels or the same region. I believe at the time we have identified plenty of M and W formation, that is basically the core interpretation of harmonic structures. But which one is MM or which one is MW, right? And where do we execute the position? And that led me to the book from Scott Carney to identify the proper execution, the proper entry at certain levels, not only saying that this is an M here, right? And we execute a position here. That is where these parameters come into place, where the harmonic ratios, the data points between each point, between each leg of the move, give us that proper entry for an execution, either on a bullish structure, an M formation, or a W for a bearish pattern. So in this case, I believe, if I remember correctly, there was some type of harmonic here that corresponded to a bullish butterfly, the 1272 here. I believe this might be new for many, but there are parameters, data points within the harmonic framework, and this is what dictates where to execute positions. In this case, we have a bullish butterfly that we do know that the range, the completion point of this M formation, oftentimes terminate at the 1272, which is a fib extension from this swing, correct? I'm not sure if I'm going too ahead of this explanation, but the idea is to explain the entry positions on an M or a W formation. The completion point on this particular M formation indicates that a turning point would either occur at the 1272 and also the 1.41, because there is a range, particularly on this M formation, for a bullish butterfly. So therefore, after identifying an M formation on the daily time frame and also the primary trend signaling a shift in trend potentially of that correction, also look for other momentum indicators, other variables within the momentum indicators, which are the relative strength index and the MACD. Those are the main indicators that I use. I do not use many indicators. I only use the RSI and the MACD basically to identify momentum, the shift in momentum. Back then, also I forgot to mention that on the primary trend, besides the M formation on the daily, there was indeed another variable that was indicating a shift in trend of that correction from 2022. So after identifying that variable, correct, the positive divergence in this case, then that gives me an argument to execute position based on the M formation that I explained here recently, that give me a lower risk and a higher reward opportunity, ideally in this sense, okay? So this is basically the idea for any M or W formation. In the same context, in the same manner, after identifying that shift in trend, basically from that correction of the secondary trend in this case, I then start to look where the pattern may reverse, right? And in a similar context, I then start plotting all the new information after gauging or gathering new information within the price action, because we really do not know how high the price may go, right? We can apply the extensions and potentially aim for the golden ratio, which is the 1.618, right, basically. However, as many moves tend to terminate at extensions of the prior swing, that leads me to another idea, okay? Because as of now, it was only an idea as to how high that M formation would potentially go after constructing, of course, higher lows, right? That indicates that a new trend might be developing after printing a new higher low than the previous, or a new higher high than the previous high. Also on the higher lows, I believe I was gonna mention that the explanation as to how high can we go from here is identifying the same formation. In this case, another bearish butterfly, presented himself at the new information, what that lead us to the 4,500 region. And this was one of the main explanation why in 2022, 2023, we're looking at these levels without being too negative on the sentiment that many Wall Street analysts and many other analysts out there were calling for the major crash, right? Only respecting the technicals from the legends of the past. This is why we, or I at least, try to respect their work of the legends of the past, the research that was already a work done for us 100 years ago. So I'm not trying to reinvent the wheel, or we don't try to reinvent the wheel. Can you hear me, Tim?
Yeah, I hear you perfect.
Yeah. So yeah, I didn't want to go too much over into it, but basically this is what I normally look for, an M or a W to execute a lower risk on a higher time frame. There can also be an argument for minor time frames, right? But at least I need to identify the trend, the primary trend, either on an uptrend or a downtrend.
Okay, so I have two questions on that chart. Really great
Yes.
explanation, by the way. But so if you enter at that daily pattern on the low, first of all, where would you put your stop loss? And then second of all, how long would you hold that trade? Because it took months, till that second pattern formed. Have you TP'd in that meantime, or do you hold open till the next pattern forms?
Yeah, that is a great question. I normally try to take profit as soon as I'm comfortable with an amount that I perceive already in my mind, despite the technicals, right? If I'm comfortable with whatever the chart present to me, I take the profit and then I wait for the next position until another formation present within the trend. So I believe back then, the main idea normally, you asked me about the stop loss, which is another key point here on futures market, because the stop loss on the ES or the futures market is a little more complex to identify the 1 or 2% rule, right? Because each point in the S&P mini, for example, represent $50. So if you are applying that 1 or 2% rule for stop losses, that would be pretty much a pretty heavy position based on the points, correct? So if you have a 2% position, that will be pretty much nearly 76, 80 points, 80 times 4, you do the math, it is a pretty $4,000 position here for a risk. But again, that comes from the risk to reward also, that many traders have different appetite for their risk, correct? So to me, when I trade the futures, I allow between normally $1,000. When I'm not too convinced, I go 500 on the ticks that I'm willing to risk. And then, of course, I need to proactively monitor my positions. And the profit taking, once I'm out of the risk mitigation process, because the first step to me is the pattern identification. Then, of course, comes the execution, where you actively manage your position. Despite being a swing trader also, you need to actively monitor the positions. And then, of course, profit taking, the immediate harmonic ratios from the highs to the lows. You guys already know, or those who are applying harmonics, we normally take profit at the 0.382, the 0.50, and the 0.618, right, to secure the trade and to call this a profitable execution. And then, of course, along the way, we exit the position in profit and continue to execute along the way within the trend another M or a W, okay? but mainly identifying the primary trend, to me at least, is very key, especially after printing consecutive higher lows here. That identifies pretty much an uptrend, or defines an uptrend.
Wow, excellent. Yeah, really, really good. Okay, yeah, thanks for showing us that. I'm sure that's the first time a lot of people have seen something like that. You know, people always see harmonics on Twitter and stuff, but it's not that detail to which you show it. So thank you so much for showing that. Guys, if you want to learn from Marbob or see his trades, he does have a private server. We're going to link it in the description. I highly recommend you check that out if you're interested in harmonics. But Marbob, I want to show you the platform we've been working on. And guys, if you haven't seen this yet because it's brand new, check this out. It's really cool. So Marbob, if you could stop your screen share, I can share mine, and then show you that. Awesome.
There you go.
Thank you. So Marbob, this platform is TradingLink. Basically, the goal is to be a transparent signal platform, and also put a social aspect into it. So the main premise is this signal pool area right here, and anyone can, become a signal giver. And how it works is it actually connects to their API on MT4 or MT5. So for now, this is mostly going to be Forex based, CFD, crypto CFDs too, but no crypto exchanges yet. We will add that. But the issue with a lot of signal providers is like you can't vet them properly. You can't really see their win rate. They don't really tell you. There's a lot of bad traders that give signals. So the advantage of this is you can click on any one of these guys and see all their data because it's API connection. So you can see their daily profit since they began. You can see account summary, all-time P&L, how many pips, things like win rate, total lots, average lots, expected return, like a plethora of data. And then the user, if they are confident in this guy's data and thinks that they are a good trader, they can go on here and pay the user's monthly fee, and they can connect their API to that guy's API, and essentially it'll copy them automatically without even doing anything. So investors now have the opportunity to copy professional traders and make informed decisions and actually see the data before deciding to copy. So that's what we're trying to do and revolutionize that space. And we're excited to add crypto soon. So if you ever want to give signals like this, where you don't have to type anything, people can copy you, this platform will be available for you.
Awesome. And this is mainly on Forex instruments, or?
Yeah, so it's on just MT4 and MT5 right now. So we support over 5,000 brokers. So if your broker has, crypto, like some brokers have Bitcoin CFDs and stuff like that, those people can trade Bitcoin. But most brokers on MT4 and MT5 mainly focus on Forex. A lot of them have US indices, but as CFDs. And then they have gold, oil, stuff like that as well.
Awesome. Yeah, I'm a proponent of the data because this is what it speaks himself, right? Sometimes we portray ourselves as winners, but what is the data actually telling us? And I believe by being a trading provider, a signal provider, this is where your historical data also is available to anyone who wants to check. So pretty good work here for the P&L, the return, the growth. You can actually see who is actually profitable in this field, rather than talking heads.
Yeah, not those Twitter influencers or anything.
Yes.
All right. Well, that concludes the interview, guys. Marbob, thank you so much again. We're going to leave all Marbob's links below if you guys want to follow him. He's an amazing trader, as you can tell. But leave a like on the video. Marbob, anything else from you?
Yeah, I appreciate the time, Tim. And whenever you want to do another interview, I would like to show more cases that what we do here in this space.
Perfect. All right, guys. Have a great day.